Today we're reviewing the Harmony portfolio performance in March. So James, how was March for the Harmony funds?
Generally speaking, Jazz, the month of March was a good one for the Harmony range of portfolios. The continuation of reasonable equity market returns, which we've seen already in January and February, continued in that month and benefited the fund's performance.
And what were the main drivers of performance?
The main drivers of performance were similar to as we've seen for the last couple of months really. Underweight to global government bonds, which sold off. The US 10 years yield moved out materially over the space of the quarter. That continued to an extent in March. Also overweight equity, both regional and local equity names in the funds benefited performance. And again, as we've seen of late, an overweight to credit, both in high yield, strategic bonds and convertibles.
Overall then, a really good quarter.
It was a strong quarter for the Harmony funds. It's really a set of market circumstances for which we have been positioned for a while, and it's nice to see that come to fruition.
And what changes have you made to the funds following the recent moves?
Well, I think we've seen a decent run-up in equity markets, and although we don't think valuations are particularly stretched at present levels, they're reasonably fair value, in fact. We have taken a degree of equity risk out of the portfolios in anticipation of a slightly choppier period in the short term. On a longer term, though, we remain constructive on the equity markets. We have reinvested where we've taken profit in the equity portion into reasonably high risk parts of the fixed income markets, such as high yield and convertible debt. So although we've cut our explicit equity weighting, we still remain sensitive to risk off periods, but less sensitive than we would have been had we kept our overweight equities.
Thank you, James.
Thanks, Jazz.